So welcome everybody. Thanks for being on the call. A couple of things I want to bring your attention to before we get started is I wrote a letter, an open letter to the governor, and it got published in all three major newspapers, the Journal, the New Mexican, and the Las Cruces Sun News. So we can only hope that the governor is hearing us and going to help us in some way. And before I go through that, we have vendors that really want to help you guys during this crisis, and they have all either stepped up to give us some vendor information here, and they've become members in many cases, and in other cases they have special offers for you that I just wanted you to be aware of. So there's all those. So Tuesday, so tomorrow's call will be with Allison and myself. Allison is our lobbyist, and myself, and we'll be reviewing documents from Workforce Solutions, the New Mexico Environment Department, and basically these documents are for reopening. We don't have the official documents yet, but we have some things that I think will help you start thinking about how you're going to reopen. And we also have a special guest that's going to be on that call tomorrow, and that is Joe Garcia from WEX here in Albuquerque. You know, he was telling me the other day on the phone some of the things that they're doing creatively to get back open and to make their customers feel safe, and of course their employees as well. So I thought it would be good to have him on that phone call tomorrow. And then Wednesday, it's all about business interruption insurance. So Wednesday, the National Restaurant Association, just by coincidence, had a business interruption insurance webinar coming up, and you can join that call by registering here. And then of course you can join the NMRA call at 3 o'clock. And this is with a local attorney that's working on some of these business interruption insurance issues. One of the things I want to tell you and ask you to do is the governor is to give a firm reopening date and allow us to open county by county. So that's what my letter said to him, to her, excuse me, the governor. And this is to send a message to the governor. It's super simple. All you have to do is put in your information. I would love it if you would add something in the very beginning that has to do with your restaurant and your thoughts about reopening. I don't even care what they are. Even if you don't ever want to reopen, the governor needs to hear from us. And then, you know, our letter goes into why we need her to tell us this with some notice so that we can buy inventory and other things. So that is what's happening. We have job board listings and other things. So I just wanted to make you guys aware of that. And right now, I am happy to introduce to you Aaron Frazier from the National Restaurant Association. Aaron is the Director of Healthcare Policy at the NRA, and most recently he spent his time working on the PPP loan. There's not much going on in healthcare, but there's a lot going on in relief. So Aaron, thank you for being here today, and I'm going to let you take it away. You are unmuted.
Thank you, Carol. Can you hear me?
Can.
Great. Well, thank you so much for allowing me to speak to the New Mexico Restaurant Association. As a visitor to the state, I learned that essential question, red or green, really quickly, and it's something that we enjoyed in Albuquerque, Santa Fe, Taos, and all those amazing places in your state. We wanted to share quickly, Carol mentioned that I have the privilege, with a question mark, of working on the PPP program. And we have, you know, when it got passed in the CARES Act at the end of March, I think it was almost a different world that we were living in, that like it sounded like an 8-week loan would be a really big thing, whereas we know that that's really just like it's the Band-Aid on a deepening wound. And so we really want to make sure that more restaurants, more members have access to loan forgiveness, because we know this is going to be a very long process. And all those issues that Carol was mentioning at the top of the call will continue to be challenges one way or the other. And that's why it's so important for us to be cohesive and have these discussions. So on Sunday night, on May 3rd, we heard from the Treasury Department that they addressed two of our issues that were really paramount for those folks who have received a PPP and want and need loan forgiveness for that PPP. We have seen that the rehiring, when your restaurant is under government closure mandates, rehiring your workforce is very challenging. Not to mention, you're rehiring a workforce with no work because of those closures. So it's both counterintuitive and it's extremely challenging to do that. Throw on top of that is this cocktail of misfortune where also within the CARES Act, there's been an extra $600 being added to weekly unemployment benefits. So if someone was laid off when restaurants were forced to close in March, now they're receiving, give or take, $900. In some jurisdictions, it could be even more than that. But generally, they're earning close to around $50,000 a year, the equivalent of that, on unemployment benefits. And those unemployment benefits go until the end of July 31st. So that's a pretty key time period because the PPP loan expires by June 30th, even if you got that 8-week loan pretty late. So not only is it very, from a cash flow perspective, hard to get someone to return who's on unemployment benefits, but it might be more secure for them, for that individual to be on unemployment benefits until July 31st, as it would be to take a temporary paycheck through the restaurant that won a PPP through the end of June, only to be laid off again on July 1st because there's no work still for that individual. So we illustrated this issue as soon as possible. I believe by the end of March, we already had a letter into Secretary Mnuchin at Treasury and Administrator Carranza at the Small Business Administration saying you really need to recognize this. We think you can exempt employers from, you can exempt PPP borrowers from loan forgiveness reductions by using this authority that we kind of identified buried into the bill that was called de minimis. Let's hold them harmless. Let's call it a minimal issue. And if an employer offers to rehire their workforce, but they say thanks but no thanks, that employer should be held harmless. They should not suffer loan forgiveness reductions if people refuse to come back to their jobs for many good reasons. We won that as an industry, thanks to people like Carol, thanks to people on your board, thanks to for all of your all of your contact that goes into members of Congress and to your senators. That's really, really important stuff because they see how important this issue is, and they see that we need to give something. We need to show some forgiveness of our own, and they are not going to be able to reduce your loan under the PPP if your employees are offered to be rehired and do not comply. Now, as a smart bunch, I know that you're saying, well, how do I document that? How do I prove that? Would those former employees be held liable by the state if they're refusing to work and still collecting employment benefits? The truth is a lot of those exact stipulations need to be resolved through a series of federal regulation, federal guidance, and even state guidance from your labor department. But we have the first bit of momentum in terms of getting that loan forgiveness for PPP recipients. There should be, and I would have said the same thing last week if I talked to you, I would have said the same thing the week prior, but there should be loan forgiveness guidance being issued this week by the Treasury Department and by the SBA. This is really where we focus a lot of our comments federally, both through Congress and through the open regulatory process at SBA. We said here, the covered period, where you have to use everything under 8 weeks and you have to use it by June 30th. We thought that was silly. We said this is a long process. Let us extend the amount of time we can use the loan. Number two, we said you can't tie our hands and say 75% of this loan must go to payroll and only 25% can go to non-payroll items like rent, mortgage, pre-existing debt obligations and utilities. You are tying our hands during a period of which we need everything we can get, every finger at our disposal, every lever we can pull. But unfortunately, the Treasury Department and SBA said 75-25 is the way you need to spend your loan. We're still working on that. The last part of it is if the PPP loan is not forgiven, we need to extend the terms of when that loan gets paid back. The Treasury Department and the SBA said that loan needs to be paid back in 2 years. We thought that was silly. We thought we don't even know where this industry is going to be in 2 years, frankly. And Congress, under the CARES Act, said you can pay it back in 10 years, up to 10 years. So those are really our three primary focus points on PPP. There's a lot of other stuff that we've submitted to Treasury and to SBA. We're in, we are in touch with them a lot in terms of we reach out and send questions and ask for guidance, we make recommendations, and they say, thanks, got your email. But we're still pressing, and we do have some small progress points that we wanted to share, like in the de minimis loan forgiveness reduction that we had just last week. So I'm going to stop there on PPP. I know there might be some questions on that, but I also want to really quickly say that we are tracking more what's known as phase 4 of coronavirus-related legislation. We have about 2 or 3 weeks when I last spoke with everyone, we were working on the employee retention tax credit. We talked about that briefly. There is a bill from Congresswoman Stephanie Murphy of Florida, and she introduced a bill that would extend the employee retention tax credit in an innovative way to more businesses, and it would allow you to access the employee retention tax credit after your PPP loan. And we like that a lot because the CARES Act prohibited it, but we would like those to work in conjunction with each other after an appropriate sequencing of those uses. So that's one piece of legislation I just kind of want to put on everyone's radar. It's called the Jobs Credit Act of 2020 from Congresswoman Stephanie Murphy and a couple of other co-sponsors. We would love to have your members of Congress on that, and if you could track that down and share it with them and let them know that you would like their support on it, and you plan on using the ERTC, these are great anecdotes for us to use as well. So please let Carol and me know if you would like to have any more information on that. Carol, what am I missing? What can I add?
No, every time we get on these calls about PPP, we have more questions than we have answers. And I know you're very close to this, and we'd like to hear from you, I think, answers to some of these questions. So I'm going to let Dion ask questions, and we'll just go from there. So Dion's going to read the chat questions.
Great. Okay. Thank you, Aaron and Carol. What if you didn't ask all of your employees to come back since the business is closed or you're only doing takeout and delivery? Will the payroll you do pay for the employees you did keep working be fully forgiven?
Yes. The payroll, the compliance you have with the payroll is that they want 75% of your loan to be dedicated to payroll, period. That's the covered expense. And that could be healthcare, that could be other forms of compensation, and that could be the wages that you pay. So that's what they're going to look at, the totality of it. But if you are not offering the jobs back for your staff, then they start to reduce for your full-time eligible employees. And we're calculating that as 30 hours or more equivalent per week. If you're not offering those FTEs their jobs back and you accepted the PPP loan, you are eligible for loan forgiveness reductions. So what we want to do is make sure that people who do have PPP loans are eligible for the maximum amount of loan forgiveness. So I would consider documenting very well when you offer to rehire someone. If you think they're going to say no, that's great, document it. Mm-hmm. And then you can bring that to your bank later on when you're seeking forgiveness for the loan and say, I made this offer of rehire. Or you might just say, you know what, I didn't offer everyone back. I didn't offer everyone their job back. I didn't offer to rehire everyone. So I want partial forgiveness for the loan. There's a way to do that too. It's a proportional sliding. There's a proportional reduction though in your loan forgiveness amount.
Can you talk about that a little more? Is that in proportion to the amount you spend on payroll?
So that's a great question, Carol. There's a salary threshold.
Okay.
In terms of they're going to look at your total payroll for an average month prior to the loan. So if your average payroll was $100,000 for every month for the prior year, and you only pay $80,000 under the PPP loan period, then you would hypothetically be eligible for 80% of loan forgiveness. And additionally, if you generally have 5 full-time equivalent employees, and then you only have 3 during the covered period, you might lose 40% of your loan forgiveness. Now, how that all adds up, that's an equation that we need more guidance from Treasury and SBA, but we don't have that yet.
That's so hard. Go ahead, Dion.
Yes.
So our next one, we've received our PPP and immediately started hiring as many staff back as we could. Then we realized that with minimal takeout business, we're getting sacked with 941 tax payments. So we've cut back on spending our PPP money because it's killing us without having any business levels. Is there going to be any help with that and workers' comp?
I'll need to look into 941 tax payments. I have heard of the workers' comp issue, and that's something that's kind of being a little bit folded into our business interruption insurance issues. And also what we're hearing from Senate Majority Leader Mitch McConnell about employer liability. That's really the red line in the sand that he's drawn for any further legislation that must be protecting employers from lawsuits that are going to happen because this is such a unique virus. But in terms of specific 941 tax payment issues, I haven't. I would need to look into that.
If you wouldn't mind getting back to Carol, if you have an answer on that, and she'll make sure that we forward that information.
Okay.
Thank you so much. When do you think we might hear about extensions to the 8-week requirement? And a secondary question to that, could it be up to the state's discretion?
It cannot be up to the state's discretion, unfortunately. Just today, and keep in mind we've been chiseling at this monolith of a wall for a while. Just today, Secretary of the Treasury Mnuchin said that he supports changes to small business aid program, the PPP. Treasury Secretary says technical fix is possible as restaurants and others say terms don't work for them. So then that was a headline in the Wall Street Journal today. Last week the headline was we're not going to change the PPP. We don't have the authority to do it, and we might audit anyone that has a $2 million loan or more. That was the headline last week at this time. So for us to hear the Treasury Secretary saying, yeah, restaurants are raising some good points that we might take under consideration, we're like in shock in a way. And I think the only thing we're going to be able to do is share the article because we're still asking what does that mean specifically in terms of the covered loan period. But we do know that some of the legislation already that would fix PPP has been introduced in Congress. It's part of the Restart Act from Senator Michael Bennet of Colorado and Todd Young of Indiana. And there's a couple of bills, one from Senator Joe Manchin of West Virginia, that would specifically look at the time period of the PPP and say we're going to allow an extra 8 weeks, we're going to allow an extra 4 weeks. So that is top of mind for a lot of people. When is it going to happen? Unfortunately, I do not know. I was surprised today to see the Treasury Secretary saying restaurants have raised some good points on the covered period and how to spend the PPP loan. I was very surprised by that. But I think a lot of it is because of your voices and other states that have said this is an unworkable structure.
Okay, great. So our another question, as we pay people while we are still closed, there was a suggestion in a past webinar to note checks as discretionary pay, since they will not, at least initially, be directed to the hours worked, as well as the fact we'll just be paying front of the house workers typical tips amount also. However, should we be noting hours on pay stubs too in order to document maintaining the FTE hours? That's a big question.
I would definitely be documenting hours. I would be documenting as hours because, again, the guidance has not come out specifically saying, even like on cash method versus accrual method for how you're making these payments, these disbursements. We've asked Treasury 6 days ago saying very specifically, can you make one bulk payment and just say, here's the payment for my 75% of my loan to my employees and I'm done. You know, here's your paycheck. I don't have to slice it out over the time period. Here it is. Or I'll just save it for the very end of the covered period and use it as a rehiring bonus and say, hey, by June 30th, you'll get a big paycheck. And that means you're back by July 15th. We have asked these questions and we will share guidance as soon as we get it.
Great. Do you have any word about utility expenses not being tax deductible?
Yeah, the deductibility issue, it was a headache we didn't see coming. IRS issued guidance saying that they do not expect common business practices under the PPP program to be tax deductible. Now, you might say to yourself, well, if PPP is paying for the utilities, then why would it also be tax deductible? And the answer is because in the CARES Act, in the program, they said this is tax deductible. But the IRS made a ruling or issued guidance to the contrary. And we have now the chairman of the Senate Finance Committee, Charles Grassley, his counterpart, the ranking member from Oregon, Ron Wyden, there's this bipartisan outrage saying, no, the way we wrote it is that it's still tax deductible. We don't want to lose the deductibility of these expenses just because there's this emergency PPP program. I haven't seen resolution on that. When it does, we'll definitely share it with SRAs. We'll share that with Carol to make sure that everyone can see it. But it's one of those things that Congress is scratching their head saying, who's implementing this stuff? Because we thought we were very, very clear in the bill, at the very least on that point.
So then, speaking on taxes again, what part of payroll tax is included in the PPP?
I would have to look at it to get that exact language.
Okay. Do you have any clarification about whether or not we have to have 75% of our staff back immediately after getting the PPP, or if you need to have them back by 8 weeks following? I know you kind of touched on this question before when we were talking about the dating issues.
I would structure it as I need to have 75% of my payroll, 75% of my loan needs to go to payroll. And then I would say I must pay at least 80% of my wages from the previous average month, at least 80% of that payroll. And then I would say, how many FTEs do I need to bring back? And then I would make that calculation just as so I wouldn't tell you when to start paying. I would recommend you set your own formula for what your own 8-week period looks like, what the average payroll is, making sure you hit 80% or more of that average payroll. Make sure that tips are included for those folks who are coming back onto your payroll. And then I would maximize my FTEs to make sure that I'm gold when it comes to loan forgiveness applications.
Okay. For the loan, do they have to offer a job to every employee, or can the employer choose which employees to offer it? Is it just about filling that FTE?
It's about filling that FTE.
It doesn't matter who? It doesn't have
Correct.
to be the same employees you had previously. Okay.
Correct.
This one is kind of an aside to Carol, something that we might be able to work on. Is there a rehire form that NMRA can devise that works for the PPP forgiveness as well as for the state unemployment piece? That would be a big form.
Yeah, and we're going to review the state unemployment piece tomorrow. And Aaron, I might just send that to you really quickly, and if you have a chance to look at it, see if that would suffice for the PPP as well, or if there's something we can do to it to make it suffice.
Yeah, I think as a state, that's a very good, for state unemployment, I think that's very important. I would be cautious about, and there are people smarter than me that would be devising that and working on that language for what that offer would look like, for that rehire offer. And again, we're in mid-May, which is crazy that we don't have this guidance. But I would make the rehire offer, document it, make sure it's in the email, make sure you have it, 2 or 3 times if needed, or screenshot of a text message, however it goes. Because there's still that big question. And again, we have sent these questions into Treasury and SBA of, okay, I made my rehire offer. They said, no, my loan forgiveness should stay fully intact. That's the way the new that new FAQ came out from Treasury. That's what it said, right? Right. But then I'm thinking to myself, okay, so now I have PPP loan funds that are not used because that employee did not accept my rehire offer. What do I do with those loan funds and stay within that arbitrary 75-25 threshold for loan forgiveness? I don't want to violate that 75-25 threshold. So we are pounding on the door virtually of Treasury and SBA to say, make sure that money is able to be utilized for non-payroll expenses. Make sure that money is not just in a lockbox for an imaginary employee that didn't accept the rehire offer. Make sure that money does not go back to Treasury and SBA, which is not what the program is for. Make sure you can use that money for rent, for mortgages, for utilities, for pre-existing debt obligations, because we need it. And that's closer to congressional intent than anything that is coming through the machinery of regulations that we're still trying to navigate or haven't gotten yet.
Can I add payroll taxes to your litany? Because I'm hearing that more and more is that the payroll taxes are the ones that are going to hit and hurt, even when we have this money to pay payroll. So just a thought.
Right. Absolutely. That's a great point.
Now, Aaron, what time frame, months to be exact, do employers use to figure out the FTEs? Just because the scheduling for restaurants is so complex.
What months do they use? So at FTEs, that you're going to take your Affordable Care Act definition of an average of 30 hours or more per week. That's going to be your calculation for what an FTE is. Now, I get it. Sometimes an FTE might be over 30 or under 30, but I would say generally try to use the Affordable Care Act definition of what makes a full-time equivalent employee. And then you would use the average month, the 12 months prior of when the loan is dispersed to you as a PPP borrower. Now, if you're a seasonal business, which I know a lot of folks in New Mexico are, you can use a seasonal period between February 15th and June 30th, or March 1st and June 30th, and look at that same period from 2019, and look at your FTEs from that period.
Okay, thank you.
So I just want to tell people that we did get some different advice on using a 30-hour FTE or a 40-hour FTE, and this was from a CPA who said a typical full-time equivalent is 40 hours, and we kind of figured out that would be better for our members than the 30-hour FTE. So people have used different ones, and I don't know that it's going to matter, because what's going to matter is, in the end, are you using the same FTEs? And you probably will, to do your loan forgiveness as well.
Carol, was your accountant friend or your accountant advisor, were they using the FLSA full-time equivalent of 40 hours per week?
Yeah.
Wow. I guess. So, it's interesting, because when we've been talking about that in the restaurant industry, that's such an important distinction. We've asked that question a few times for clarity, But then we've gone back to Congress and both Democratic side and Republican side, and they've said, yeah, that looks like the 30-hour definition from the Affordable Care Act. So that's that, and so I'm happy to be wrong on that, especially if it's more beneficial to our industry. But that's interesting that there's guidance going the other way there.
Well, I do think that in the end, you're using the same FTEs. So as long as you use 30 to calculate those numbers in the beginning, and you're using 30 to generate your numbers for the forgiveness, it's probably going to come out even. It's if you calculated 40 in the beginning and you do 30 now, that's going to be confusing. So
understood. That makes sense.
And most of these folks have their PPP loans, but just for people's knowledge, I believe there is still money out there for additional PPP loans. Not that you want to take another one, but for people who have not yet. Is that your understanding, Aaron?
Yes, there's the funding has not been exhausted yet.
Okay, go ahead, Dion.
Due to lower staffing needs, we are facing the issue of not enough payroll costs to get our qualified expenses covered. Are we able to increase our payroll costs temporarily? I think you touched on this earlier, by paying the working employees more, and if so, by how much? And further, are short-term disability and life insurance considered payroll costs?
Disability and life insurance payments are considered payroll costs. They are considered covered benefits or in compensation for payroll. What was the first part of that question?
Now, the first part was, because they have lower staffing needs, can they just increase payroll costs to the smaller staff by paying the working employees more?
You can do that, but I would imagine it's like squeezing the other end of the balloon. You're going to lose your FTEs on the other side there. And, if you just can't find anyone, like here's my question with that. And yes, you can pay someone more, but the problem would be if you're using all your PPP loan amount on less FTEs, then you might lose loan forgiveness ability if you're not reaching more FTEs. It sounds like they might be offering to rehire people, but they just can't get people to accept the jobs.
No, I think it's that the staffing needs are lower. So we just probably need to address that you need to simultaneously look at spending the money and the FTEs at the same time.
And then you're also talking about staffing levels, like, and I know this sounds against pragmatic, hardworking, lean operations restaurants. But it doesn't matter if they're coming back or if you have staffing needs. You can send the paycheck to someone who's been at home not doing anything for 3, 4, 8 weeks. It's about getting that paycheck out the door and showing that you paid someone. It's not about whether or not there are unique staffing needs currently in May of 2020 or June of 2020. You just need to show that you got the paycheck out.
We've had that discussion, and I just want to tell people that we will also be talking about 2 things tomorrow on about the Workforce Solutions, what they came up with in their guidance to us. And that was, number 1, a person cannot refuse a job offer if they're on unemployment. And number 2, there is a way for them to continue to get unemployment, their $600 check, and be on your payroll. So be sure and be on that call tomorrow if you're not aware of how to do that.
Great, and I've received a few of these questions that are about unemployment, so we're going to make sure that we log those for tomorrow and get back to those folks as well. When figuring out the payroll percentage of the PPP, do you look at the employee's gross or the net wages?
Gross.
Gross.
Okay. I believe it was the gross. Now I believe it's the gross, Carol. If you've heard that before.
I haven't ever. I guess I assumed that it's the wages paid without the taxes taken out.
Right.
Probably.
Yeah, that was my understanding, but I haven't heard that one.
Because that's how you calculated the original FTEs in your payroll is hopefully on the gross and not on the net.
Right, exactly.
Okay, great. So our next one is, how do you, quote unquote, make sure that you can use the money for other than payroll? Like, how do you know for sure that you can, how much can go to payroll and how much can go towards utilities in those?
Isn't that the 75-25?
Yeah.
Okay.
So it's just a matter of keeping track of accounting then?
So that's
Right.
assuming that you have brought back your payroll to that full extent so that you can take the 25%. Is that correct? Or to what extent do you have to bring back your payroll in order to get the 75-25 match-ish?
So the payroll has to be 80% of
Okay.
what you had on the previous average month. So everyone could hypothetically take an 18% haircut on the wages. I don't think that that's an option due to unemployment benefits broadly,
Right.
but you can go down 19% from your average monthly payroll under the bill and still qualify for full loan forgiveness. But again, that 75-25 threshold, I wouldn't start with 80, the 20% reduction in payroll. I would start with, I have $100,000, 75,000 must go to payroll. Now that can include different forms of compensation and benefits that you have structured through the company. That can include your healthcare premiums, those monthly healthcare premiums. That can include retirement pay or anything else that's more creative than I'm thinking of right now. But the rest of it needs to be wages and salary. And then that other 25% goes to rent, mortgages, utilities.
Okay. Now, when we're bringing back these previous employees, are they now considered new hires since they've been collecting unemployment? Or is that a question for Workforce Solutions tomorrow?
Well,
I think that's a workforce issue, but I don't have the answer to that.
and they're not going to be on, so I'm going to be on. And I don't know whether it matters if you consider them new hires or not. I guess for your benefits, you would consider them or not. I mean, I think that's a question of fairness. I would give them their benefits that they have accrued previously, if that's what you're asking. If not, do me a favor and clarify in a chat.
Okay, great. If a person working 60 hours per week equal to 1.5 FTEs, then assuming you're using the 40 hours instead of 30, can you count your salaried employees that are working way over 40 hours as more?
Mm-hmm. Right? Aaron?
Can you count them as a 1.5 FTEs? I don't believe so. I believe that's still 1 FTE.
It depends on if they're on salary or if you're paying them hourly, because if you were paying them hourly for 60 hours, then I think you could divide that. You tell me, I don't know that for a fact.
He clarified that he does mean hourly employees. So it might be that you're looking at the total hours worked by all of the employees.
And they're
maybe
making overtime, right?
Yeah.
I would still say, I would encourage folks to think of it as in terms of the lender who is going to make the recommendation to SBA whether or not this loan should be forgiven. And if you're going to point to an hours worked of one employee and say they work 60 hours a week, so that's as if they have their 1.5 employees or 2 FTEs, even though they're 1, I would be really cautious about that, because I don't think the lender who's looking just for an FTE amount under some formula that has not been devised yet, because we haven't seen it, I would be very cautious to say that counts more than 1 FTE because they're working so many hours. I don't think that explanation is going to help with loan forgiveness on the other end of this.
Okay, I'm going to go with Aaron on that.
So here's another FTE question. Since the CARES Act states that you maintain FTEs by June 30th, can we only have 75% of FTEs by the end of our 8 weeks and then hire the other 25% before June 30th so that our 941s will show 100% of the FTEs and then we wouldn't have to pay them for the entire month?
That was exactly in the question that we submitted to SBA, or I'm sorry, to SBA and Treasury last week.
Okay,
That's exactly what one of our board members raised and said, can I do the lump sum payment? You know, who cares if it's in every 2 weeks if someone just needs the money and I'm required to give them exactly this amount of money, whether it's lump sum or whether it's weekly, daily, or biweekly. You know, different. there's this unique situation. Can I be a little more creative with it than, and I want to make sure I know that before I put the money out there. So we are still asking for guidance on that.
I did have the question that, can I start paying them later and then give them a prepayment basically for that month that I don't have the PPP loan? I said I didn't think so, but I guess you guys are still trying to get clarification on that.
Right.
Okay.
So this is from Matt, says, I was under the impression this is all about hours. You need to calculate the hours per payroll, then divide that by either 30 or 40 hours. So it sounds like we're, I don't know. Is it about total hours or are we counting heads?
We're counting heads. It's the full-time equivalent employees. And Carol and I both have ideas on what that looks like. Carol heard from an accountant. Just to refresh what we were talking about 5 minutes ago. Carol heard from an accountant that they might be using a 40-hour definition, and I've heard from folks that they're using the 30-hour ACA full-time equivalent employee definition.
Okay. So Aaron, this one's more of a statement, but I want to see if you weigh in here. I'm really hesitant to pay out money to employees that I do not need right now when it's not clear I can get reimbursed 100%. Seems like the best thing to do is run with few staff until the SBA guidance comes out and I know I can be reimbursed. I don't need nearly anywhere near the 805 of my employees on June 30th. What's your take on that?
So if you're thinking about giving the loan back, if you receive the loan, and if you have 800 employees, it's probably a pretty big loan.
I'm sorry, he meant 80%.
Oh, okay.
Typo. Sorry.
Okay. So you can give the loan back by May 14th. I think we are, because this is so important, I think we do unpack it a lot, and we try to look at all the component parts to make sure we understand each step. But I do think that as current guidance indicates, if you do your internal formula correctly and you ensure that 75% of that money is cordoned off for the employees, and you think that you can hire back most of your FTEs, and if you can't, then they'll give you documentation that says, I am not going back to work right now because of the pandemic or because of unemployment or because of a whole host of reasons that we don't even need to get into. That's okay. And I can probably utilize that money. But I would also be very close contact with my lender, with the bank, because they have a lot of discretion in looking at these provisions. So while your colleagues in the industry and us folks that are advising through our trade groups, we can provide the best answers as we kind of go between our members and members of Congress and Treasury and SBA. As much as we ping pong between those groups, it's really your relationship with your bank and how they see a lot of these provisions shaking out that at the end of the day is going to show that forgiveness, that's going to recommend that this loan be taken up by SBA and bought up under this program, or whether or not it's going to be on your books going into 2021, 2022. And I just know if I was owning a restaurant, that's the relationship, that understanding, the way that they're going to read it as the bank is really going to determine what the next 2 years look like, because we were hard pressed to get really good information from Treasury and SBA But again, and then when we see things in the news, like today, I read the headline from the Wall Street Journal, and I think Carol got the email from Mike Watley on the story that actually did a hat tip to restaurants and said, "We've heard from you. We're going to get it. We know there's technical fixes we can make." But that doesn't mean a lot if your bank is not following it, or if your lender still thinks that you're operating under the previous rules rather than improved ones that will get these loans off our books.
So there's a couple of things I'm telling people to do, and thank you, Aaron, because that's one of them, is I don't care if you know your banker, you're going to get to know your banker, and you need to start working with them now. The second thing is, for everything you're doing, for every move you are making, make sure you have something in writing. Even if it's the FAQs from the Treasury Department, print those out, keep a folder separate, because those are changing all the time. And you're using this information today to make your decisions. And if they change it later, you're not going to have that reasoning why you made those decisions. So for every decision you make, whether it's a 30-hour FTE or 40-hour FTE, where did you get that? And somehow put that in writing somewhere, that you have a file to go with the money that you're spending, because I know it's all up in the air. And what's going to happen is, in the end, you and your banker are going to say how much of this is forgiven, and you're going to say, well, I have this, this, and this to prove that I am right in my forgiveness in this. So I don't know if that's going to work in the end, but I think it's going to be a better thing for you to do. Aaron and I are doing our best to keep up with all of this, and I know every one of you knows probably more than either of us, because you're out there trying to spend this money correctly. But we're all just putting this together as best we can. And Aaron is an expert. I've become a semi-expert, but I am not an expert on this. So take it with a grain, and be sure that for everything you do, you have that paper backup, and you're printing it out and you're putting it in a file. Do we have more questions, Dion?
No, it looks like just as you were speaking, that the chatters are answering each other's questions, which is great. I mean, you really have to rely on each other here. Just to clarify, it's the deadline to use the PPP loan is 8 weeks from the date you receive the funds. It's not June 30th. So it's going to be individualized based on when you receive the funds, correct? Your 8 weeks begins the day you receive the money.
So that is my understanding, and yeah. This is going to be frustrating. My understanding is that you would have to backdate it. So if May 5th, if you would win the loan, then you would backdate it to May 5th, and your 8-week period would end on June 30th. That's my understanding of what the covered period says. So if you win a loan, like, we do expect the funds to be exhausted by sometime this week. But if you would win the loan, say on June 1st, you don't get to extend into July for your covered loan period. You would have to almost backdate it to May 5th, and you would make back payments to your staff and to your rent and utilities. So you'd be paying, say, I got my loan, now I'm going to pay my bills from May. Right now, I'm going to use those funds. So, and I know that's frustrating. That might open up another can of worms, but the end of the covered period on June 30th should be the end of the loan terms as well, as we read the regulation. But this is something that, again, I hate to say it, but we are looking for more guidance on.
Okay. This is kind of on the same question. Is the payroll cost on a cash basis or an accrual basis accounting? Can I run one last payroll ending the last day of the 8-week period?
That's exactly what we asked last week, because we've heard through accountants they recommend use the cash accrual method. Use the cash method, not the accrual method. But we were trying to ask specifically that question with Treasury.
Now, Carol, I do not see any further questions that are PPP related. We still do have a few lingering questions that are related to workers' comp, I'm sorry, not workers' comp, unemployment,
Okay.
which we can address now or tomorrow.
Yeah, ask me now, and then if I don't know the answers, I'll try to get them before the call tomorrow.
Okay, so one of our Facebook Live listeners says, assuming we're able to come back to work on the May 15th, but if it sounds like he's an employee maybe, but still feel uncomfortable or have a compromised relationship immune system, can we still be able to collect unemployment?
There is a way in which you can collect unemployment, and it requires you going to a doctor and getting a doctor's excuse for you and sending it not to your employer, but to workforce development. And we will be going over that tomorrow. So I'm happy for you to be on that call.
I'm just going over the questions really quickly. I think that we have answered anything. If we have not, please jump into the chat right away. But it looks like everything has been answered.
Okay. Aaron, thank you so much for being here. I really appreciate it. Thanks for staying on top of this for us and for getting clarification as much as you can. We out here,
absolutely.
We really appreciate it. I mean, not
Thank
just
you,
you,
Aaron.
but I know my members do too. So thank you for being that point of the spear for us and taking the bullets, right?
Yeah, and thank you, Carol. Thank you, Dion. Thank you to everyone. Our hope and our dream is that we're going to come back to those amazing restaurants in Santa Fe, Albuquerque, and Taos, and all the places that I haven't seen yet. But thank you all, and best of luck.
Wow, interesting. I was going to show you all an update, but I can't get it to scroll. So, nope, it's not doing it. All right, thank you guys. We will be back tomorrow with more questions,
Carol,
more answers. Yes.
Carol, this is Tom. Can I ask a quick question, or just
Sure.
as clarity for everybody on the line? And maybe this is obvious to others. It certainly isn't obvious to me yet. We know the governor's current emergency order expires Friday. That also coincides with what I believe her precautionary period expires to. I think some of us were hoping that phase one, according to her plan, kicks in on the 16th, which would include restaurants opening to 50% capacity. We're 4 or 5 days away from that. What do you know?
All I know is that we have heard from our representative on the Economic Recovery Council that she is not going to open on the restaurants on the 15th. And I have also had a call with somebody in her office, and he said that she will not be opening restaurants on the 15th. So here's
on that point, Carol, can I
Yeah.
say something on that point?
Sure.
So, and Tom, this is Allison. It's not only restaurants that might be delayed. It is quite possibly other businesses as well. So just wanted to kind of make that clarification.
Well, Allison, what I'm referring to as well as her phase one, which speaks to other businesses, including restaurants.
Correct.
So I think we just need to talk about it in terms of, because I don't think she's going to break us out. My guess is she's going to say my phase one is being delayed. We're going to move it back a week or two. But I just want to understand, is she extending, from what you're hearing, is she extending this precautionary period past the 15th to where she's delaying phase one? That's really what we all want to know, including my retail friends.
Right. And I can speak just a teensy bit, and Carol, if you've heard something different, I think the big thing is we don't know. I fully expect her to have one of her press conferences either tomorrow or Wednesday.
Okay.
But I know the Economic Recovery Committee was meeting today. And so, she is a part of that. And then I do know her staff member, the same staff member that Carol was referring to, was putting together all of the various guidelines from all of the subcommittees to be part of the discussion for their economic recovery team today. I don't know if that actually happened, but I know he was supposed to be preparing all of that. One thing I will say, and I probably can talk more about this tomorrow, but from what I've heard, the guidelines that we've created for restaurants are kind of being looked at as a gold standard for all of the other subcommittees. So hopefully that's a good thing. But the short answer is we don't know.
Yeah.
And that's where the rub is. And I think that's really why Carol had that letter of, give us some guidance here, give us some heads up, because we do know that, restaurants take longer to get up to speed than a lot of other businesses. And so we've been asking for that, that heads up so that you guys get ready.
And I appreciate that. And those are all good answers, Allison. Thank you. But in looking back to what her criteria that she was going to use to open phase one, and all of us were paying attention to that, it seems like we're heading in that direction. I'd hate for her to acquiesce on her criteria because when she goes public with stuff like that, we're paying attention to it.
Yep.
And some of us are gearing up accordingly. And then all of a sudden, we get this, well, I'm sorry, I've rethought this. We're going to throw this other decision point in. That just smacks of more uncertainty and lack of confidence in what's going on here.
Understood.
Yeah.
And one of the other things I can say on that point is some legislators have been talking to her and asking for better communication. They're she's communicating with them, but she's not actually communicating with the broader business community. And so those legislators that were on a call with her today were asking for, hey, communicate this better. And that's kind of to your point. You're watching the metrics that she's set out, and she's not really coming back out and saying and updating that as frequently as we need her to be doing. So I'm hoping if she does have a press conference tomorrow, that she gives a little bit more clarity as to her plans, because that is one thing we've made clear to her. At least I have in some conversations I've had with with some of her staff, and I know Carol was talking to her, one of her, really right-hand people, and that is, communicate this. We need to know. We can't be in the dark.
Thanks, Allison.
My pleasure.
And please, folks, I think it does matter what you all do. Please don't, just go back to our email from this morning and send this message to the governor. And you can even send it to your employees to send it. Some of them want us to be reopened. Some of them don't, I understand, but a lot of our employees are tired of being on unemployment, and they want to get back to work. So I just invite you to do that, because I do think so. This message is not just going to the governor. It's going to your city councilor. It's going to your county commissioner. It's going to the governor and our Congress folks. So everybody's seeing this, and they're seeing your plight right now in this missive. And so please, please, please do send this out, and put something in the beginning of that letter that's something about your restaurant and how you're struggling, because it's people in your district that are going to get that letter. So with that, thank you all for being here. As soon as we know more, we will let you know. We're not holding anything back, and I'm doing my best to get the governor to pay attention to this industry and give us some answers that we need. So thanks, guys. Talk to you soon.